Blockchain Show is a podcast that demystifies cryptocurrencies and distributed ledger technology.
Hello, ladies and gentlemen. Welcome back. You're listening to The Blockchain Show. This is episode number 173. Today, I have a guest from Zilliqa. It's Amrit Kumar, the President and Chief Science Officer. Amrit, welcome to The Blockchain Show.
Thank you very much for inviting me over. Hello to the audience.
We're very grateful to have you here today. I think perhaps the best way to get started would be if you could just tell us a little bit more about yourself and how you came to be involved in this ever-evolving industry known as the blockchain.
Sure. So my background is research. So I have a PhD in computer science from INRIA in France, which is Center for Research in Computer Science and Robotics. And while I was doing my PhD, this was around the time when Bitcoin was becoming popular in the trading space in some sense. And around the same time, researchers were looking at Bitcoin from trying to find how to improve Bitcoin. What are the problems that Bitcoin tries to solve and how to address them scientifically? And this is where I felt that there's an opportunity for active research. And though I was still in the middle of my PhD, I felt that once I finished my PhD, I would probably start working on Bitcoin or a project related to Bitcoin. And then after that, I moved over to Singapore and to work with a professor at National University of Singapore, which is the biggest university in Singapore. And this is where I started to work with a professor who was working on scaling blockchains, basically. So he was looking at Bitcoin Ethereum chains and was looking when we looked at these chains, he was saying that there were issues around scalability, and so there were a bunch of other projects that he was working on, and so I felt that maybe this is the right opportunity for me to work on blockchains. So the first my entry into blockchains was with Monero, actually, the privacy preserving cryptocurrency that's out there. And so the first project that I had was to understand how much privacy you actually get when you use Monero in the real world. And from there, I got very much involved into blockchain. So my first blockchain paper or document that I read was Monero's white paper. After I read Monero's white paper, I went to Bitcoin's white paper. So it was kind of the reverse order for me. But it was a good experience. I was able to quickly jump into what's going on from the tech space and was able to quickly contribute eventually on Monero's privacy features.
Very good. It's interesting. We had some of our co-hosts who live in the London area. I think one has since moved to the States. They were very, very interested in Monero. What was some of the attractive qualities that kind of piqued your interest with that, and how do you feel about it nowadays?
Right. So Monero, from my perspective, as I said, I didn't know Bitcoin that much. So my first venture into blockchain space was through Monero. And when I was reading the white paper, I felt that it's probably the simplest design for privacy. Maybe not the best design, but the simplest design. Easy to understand and easy to use. So if you compare, let's say, Monero's privacy guarantees and the way it's implemented, and you compare it with Zcash. Zcash is a much more, you could say, it uses much more heavyweight crypto. Monero is kind of lightweight in that sense, but still it's very similar to Bitcoin in many ways, except that it has privacy built in. So when I was reading the white paper, I realized that there are certain areas in which Monero doesn't do very well, and this is exactly where Zcash may perform better, or could perform better. And one of the basic problem that Monero had was so basically you have to mix your coins with other people's coins, and when you mix with other people, if that group of people is not large enough, you are basically sacrificing your privacy. And this basic problem that Monero had was actually created a lot of privacy issues for the first, I would say, 2.5 years of its existence. So in fact, close to 90% of all transactions that ever happened until, I think, February 2018 were all not private, mostly. So from there, I realized that there's definitely a need for stronger privacy, and from there, Monero has evolved a lot. I'm not following it very closely, But I've seen some of the changes that have been pushed to Monero, and that has certainly improved the privacy that you see right now in Monero. But anyway, the bottom line was that what I learned from my experience with Monero is that the privacy always comes at a cost. And what ends up happening is that end users do not generally want to pay for privacy unless you impose privacy on them. And that was one of the main reasons why Monero was not so private in the beginning. And only when they imposed privacy by default, this was when people started to use it as a privacy tool. So that was kind of a very basic, it sounds very, very obvious, but human behavior it's dictated by certain incentives. And if there's not enough incentive in the system, humans will tend to diverge from the expected behavior. And Monero, I think, was a good example from my angle.
Absolutely. And, it's interesting that you bring up Zcash just to bridge the gap to other applications used in the DeFi ecosystem. A lot of it rests and resides on, Ethereum and on ETH. So we've seen some very unprecedented changes over the last couple of months due to the COVID-19 pandemic. And I'm kind of curious to get your take on how financial markets are, continuing to see this huge volatility. How does that translate to, decentralized finance and
Right. We all saw that Bitcoin, for example, was completely uncorrelated with the rest of the market. But, during this time when, oil prices crashed and other things happened, we saw that there was an impact on Bitcoin for sure. So I think this one narrative that has been around for a long time, that these are completely independent, asset class, was not quite true. And the reason is that people who are involved in this space are bringing money from outside, from traditional market as well, traditional financial market as well. And when there's something bad that goes there, then it somehow will affect your blockchain market. Now, this also means that, given all the the virus situation and some of the decisions that governments have made, it has in a way empowered blockchain applications and blockchain in general, because people now realize that. This was a good example where people realize that you need to be able to build or develop applications or products or infrastructures that are somewhat independent from the government control. And this is where I think a shift is happening anyway, where people are now spending a lot of time, money, and resources on developing financial applications that are somewhat disconnected from the traditional financial space, financial world. And then if you look at, for example, Tether, Tether is a very good example of a very simple traditional sort of asset, which basically a stable coin that has become so popular that it's now ranked number 2 or number 3 right now, on CoinMarketCap. So people are also realizing right now, and the space, I think it's also realizing right now, that you don't need to complicate your protocols too much. You need to build something that people will actually use. And I think Tether, we may hate it as much as we want, but if you look at it from users' perspective, it has certainly found the product market fit in some sense, which many other products and many other infrastructure that are out there which are still trying to find out, what is the best killer application for them. So there have been certain shifts in the last few years, I would say, and it is reflecting in a good way in some sense.
Yeah, that's fascinating. I think this is a time of great change and possibility, and I'm curious to get your take on where this is all heading. From DeFi to new emerging technologies, and how does Zilliqa play a part in all of this?
I do feel that there has been a narrative for a long time that the decentralized financial space, or these decentralized applications in general, they can stand alone on their own. Well, the fact is, yes, they can, but it also means that you are distancing yourself from traditional space. And the fact is, they are somewhat connected. So you cannot just say, okay, here's my blockchain application. It will only needs to live in the blockchain world, and it will only have crypto native users. And why? Because on one hand, you have this traditional financial space, and you need some way to connect them in some way. So, for example, this is where we have been working on as well. So, if you look at, for example, Off-Fi, this is a sort of a movement in some sense in the traditional financial world. Example, banks and insurance, where they are saying that one bank should open APIs for other banks. So a very simple example would be, for example, let's say you have a bank account at HSBC, and you'd like to access your let's say Citibank account within your HSBC. Right now, it's not possible because banks are sort of closed infrastructures in some sense. So the idea behind Off-Fi is to be able to connect those different entities and different infrastructures and different products, so that you can use them in a composable way. And in a way, you're kind of seeing the same sort of things happening in the blockchain world, where you have, for example, a MakerDAO-like contract that issues stable coins, and then you have Compound and Dharma, for example, where you can lend your assets, and then they're composed. So you're building applications based on and using other applications that are already existing. So you are seeing very similar trends in some sense in those two sort of separate worlds. And the idea would be and one kind of basic difference between the two worlds is that one is highly regulated, so your banks and your insurance companies are highly regulated, while on the other hand, you have these decentralized financial applications that are not regulated at all. Now the question is it beneficial for us to think of bridging that gap? And I'm very much for it. To be honest, I would like to see ways in which we can connect them together, because then you can kind of get the best of both worlds. So you will have a somewhat, let's say, regulated infrastructure in some sense, at the same time be able to use an existing infrastructure, financial product, for example, that exists and that's actually being widely used by the mass, and then be able to connect them to a blockchain infrastructure. So that's going to be very powerful. And we are slowly seeing trends in that direction as well.
Yeah, and that's a term, Off-Fi, that we haven't really heard yet on this podcast. What does that mean? Can you break it down a little bit for some of our newer?
Off-Fi is the short for open finance. And open finance is a word that doesn't really come from the blockchain space. I would say it comes from the traditional financial space. And if I'm not wrong, it was first started in England, from the regulatory authorities in England. And what they were looking at was they were basically seeing that you had these financial service providers like banks, insurance companies, mortgage providers, and so on. And they often need to interact with each other. So, for example, a mortgage company or mortgage provider needs to talk to your bank, needs to get data from your bank, needs to send money to your bank in some sense. Your insurance provider needs to get access to your bank account to be able to, for example, deduct your premium every month. So there are a lot of these products that need to interact with each other. They need to communicate with each other. They need to get access to other data that's sitting on other products. And this is kind of where the idea of Off-Fi came into existence, where you want to open the entire financial infrastructure and say that, okay, a bank is not just a bank, but it also provides data and services to other banks, for example. So that when you open, for example, your bank account, you can use your bank account to interact with your insurance company, for example, because the insurance company will provide all the APIs that your bank needs to give you certain access. And so it will help not just the end users, but also small and medium enterprises in some sense, because sometimes they need access to these different services, but they want to build certain parts on their own, and you can only do that if these banks provide you the right APIs, which is kind of not it didn't exist like, let's say, 2 or 3 years ago when banks were all closed. So that's kind of Off-Fi in a very short description. So the idea is to open up all these infrastructures so that each infrastructure can access other products.
Yeah, very good. And, sometimes when I hear about traditional, anything, I kind of, my eyes kind of glaze over, and it's just not as exciting as the new and emerging technology. But I think that you're right. It's very important to be able to incorporate all of these, legacy. Yeah, please go ahead.
Yeah. I mean, if you look at, for example, even the new ones, these challenger banks that are coming all around the world, for example, Revolut, and 31 and Monzo, for example. These are banks, and they have a proper banking license, for example. But at the same time, they're not traditional banks. So these banks don't have branches. These are totally an app. So if you want to do anything, you have to do your app. If you want to open a bank account, you go to your app. And this is kind of the emerging trend that even the traditional banking space is kind of moving towards, where they understand that the technology has moved forward, but these traditional legacy finance has not moved that quite bit. And therefore, Revolut, for example, is a very good example of a bank, or the trend, I would say, the trend in the financial space where things are becoming more, everything is becoming more of a software rather than an entity. So a bank doesn't necessarily have to be a physical entity; it can just be a software. And when you have a software, you want this software can connect to other software, and that's the whole idea of OFFI. So I would say that OFFI is kind of the next stage where these traditional banks are moving forward after, for example, Revolut sort of banks.
To kind of to mitigate some of the volatility that Ethereum, applications built on the Ethereum blockchain and utilize ETH, would you say that kind of bringing in a broad array of different players, some of the traditional means of doing things, is this going to sort of kind of smooth out some of the volatility, or do you think that it's just going to promote like a new, more dominant, blockchain?
So, volatility of Ether in terms of price, it's something that's very hard to control, because the fact of the matter is the entire space is still very speculative. And these assets are very speculative in nature. So people want to know, want to, let's say, hold to be able to make more money. But in the end, they are also sort of utility tokens. And they allow you to build more application on top of that. And very concrete example is stablecoin, for example. If you look at right now, the most number of transactions that are actually being pushed on the Ethereum network is mostly coming from stablecoins. And the reason is that people are, and that's why I mentioned Tether earlier, is because these stablecoins, in one way, I mean, you may hate it as much as you want, but the fact is, in the end, that it's the most used app right now, in some sense. But the question is, the broader question that comes in is can stablecoins, for example, become more dominant in some sense compared to Ether for the blockchain layer? The answer is both yes and no. It depends on how the protocol is structured, right? For example, let's say if right now the purpose of ETH today, the purpose of ETH is to be able to pay for gas, and is to be able to, let's say, use it as a collateral in, for example, MakerDAO to be able to issue stable coins. But it's very possible, if you tweak your protocol, it's very possible to be able to pay your gas in stable coins directly. And there's no technical reason why you can't do it. And if you go that route, then you are kind of moving away from Ethereum's own token dynamics. It's difficult to digest that, but it's technically possible to remove all volatility at the base layer by saying that, okay, we are not going to pay gas in ETH, but we're going to pay gas in let's say, USDT, for example, or let's say DAI, for example. And you can do that. So maybe at some point of time, someone will come up with a protocol where you actually can pay gas in the base, not in the base token, but an app layer token. But still, you can always build a utility around your token, and this is where kind of ETH staking can also come into picture, where you use Ether as collateral to be able to say that I have the right to be able to mine the new block. But in the end, you simply cannot eliminate volatility directly from Ether. But yes, at the gas level, you can probably replace it with some other tokens.
Right. Yeah, I like how you built on the Ethereum blockchain. Is it just to do with the smart contract ability?
No, the fact is, there are many platforms out there. Zilliqa, for example, is one. Which has smart contract abilities. The main reason is it's the first mover advantage. So Ethereum has been around for quite a while now, and it has been able to develop a community that's out there. And so it definitely has the first mover advantage. That's the reason why you're seeing a good majority of applications that are sitting on Ethereum. But there are other projects that are being developed on other chains as well. For example, Zilliqa, We ourselves are developing a stablecoin together with a party called XFIZ in Singapore. And XFIZ is a regulated entity in Singapore, and it has the license to issue what, in plain simple terms, is called e-wallet. So they have the right to be able to issue a wallet that can hold money, for example. And now they are issuing a stablecoin backed by Singapore dollars. So that's one example of a stable, one DeFi application that's being built on Zilliqa. The other, for example, is a DEX. So in order to build any DeFi, let's say, for example, you want to build a lending borrowing protocol. In order to build that application, you need some basic base layer pieces. And one of those pieces is stablecoins. You need a stablecoin to be able to have an asset that's not volatile. And then you need, once you have a stablecoin, you need a DEX, because once you have all these assets in your DeFi space, you need to be able to find a way to trade them easily. And therefore, you need a DEX. So it's not that other, DeFi applications are not being built on other chains, but definitely Ethereum definitely has some first mover advantage here.
Right. Yeah. It's probably more of like a branding kind of thing. What are some of the challenges to to bring people into the Zilliqa ecosystem? Like, what are some of the hurdles that you guys have come across so far?
Yeah, so we're also looking at, what are the challenges that people are facing on Ethereum chain. So if you look at in the last 2.5 years, there have been several hacks on Ethereum chain. And so, for example, a few years ago, DAO happened. And then, I think $60 million worth of ETH was stolen from DAO. And that's why you had the new Ethereum and Ethereum Classic that came into existence. And then you had parity bug. And then recently, for example, the DeFi hacks that have been happening. So we always felt that there is a scope for improving the language. So the smart contract language in which you actually write your dApps and write your contracts. And, if, let's say, DeFi has to get any, adoption by regular people, not just developers, but by regular people like you and me, for example, then it cannot just, you can't just expect these apps to be hacked every other day. You need to be able to build a safe and secure dApp which can safely store, let's say, a few $100 million worth of assets in it. And this is why we started to develop a new language of our own that we call Scylla. And the design of Scylla is the whole Scylla has been designed with safety in mind. So some of the bugs that you see, some of the vulnerabilities that you see right now in Ethereum contracts simply cannot happen. But of course, it doesn't mean that Scylla will make all contracts bug-free. It simply cannot be done, but it definitely can give you a lot of strong guarantees about the safety and correctness of your contract. But coming back to your question, in terms of challenges, you definitely have to establish yourself. You definitely have to come and show to the world that what are the new features and what are you killing? What are the main features that Zilliqa provides that, for example, Ethereum doesn't? And then you play around with those features, and then attract more developers and, for example, let's say partners to develop application on your platform. And if you look at, for example, Ethereum space, it's very, the narrative that you have there is around, let's build a set of decentralized application. Let's build application that doesn't have anything to do with the traditional finance. And I'm not sure if I agree with that philosophy. Because the fact is, you have to attract many of the people who are sitting behind that traditional finance in that world. And so our approach to this is slightly different. We would like to bridge the gap between OpFi from the traditional world and DeFi in the blockchain world. And we can do that by partnering with people who have, let's say, the right regulatory license, for example. So this is kind of our approach towards, bringing adoption towards the platform, which is develop or work with partners who can build applications that can bridge the gap between traditional finance and decentralized finance that you see today.
Yeah, very well said. I know you mentioned some partnerships, and I would imagine that's a pretty powerful, step forward. What are some of these key players that you have partnered with, and how is this going to help you emerge as more of like a kind of like a bona fide DeFi player? One
thing to note that our strength is also around our location. So we are rooted in Singapore, and Singapore gives you access to all the neighboring let's say, ASEAN countries, to a large extent, even APAC countries. So you have countries like, let's say, Thailand, Indonesia, India, China, Australia, New Zealand, for example. And all these countries, and especially in the ASEAN region, the neighboring countries around Indonesia, there's a huge market of opportunity. Why? Because there are around 50 to 60% of people there are either underbanked or unbanked. So these people do not have access to even bank accounts that you see in the Western world today. And if you look at blockchain world, it gives you, in order to open a bank account, in order to open an account, or in order to create an address on Zilliqa or Bitcoin or Ether, you don't need any KYC. You don't need any access to traditional KYC modules, for example. So getting on board and getting hold of assets in the blockchain world is much easier. So we believe that if you play your cards right in this region, in the ASEAN region, then you can tap into this huge market where people just don't have basic access to financial services. And if, let's say, for example, you can combine it with, let's say, stablecoins, for example. So let's say you have Singapore on one side of the border, and then let's say you have Philippines or India on the other side. And if you're looking at remittance, for example, as a use case, there's a huge market. So there's $1 billion worth of market there between just these two countries in remittance. If you were able to build a stablecoin and use that stablecoin as a remittance or service, then you can save money. So if for example, right now, when I send money from Singapore to the UK, it literally takes me 3 days for the money to reach through the traditional SWIFT banking system. And then I have to pay a considerable fee for that. And once you have a stable coin that you can use for these remittance, then it becomes much easier to transfer money. It will be almost instantaneous, and it will cost you close to zero fees. And there's a huge demand for this in this ASEAN market. And our goal is to capture that market in some sense. And we are doing this by partnering with local parties who understand the space much better than people outside of that space. And once you partner with these people, they will give you access to their market that they are currently engaged with.
Very good. Yeah, it sounds like a truly decentralized approach where you can pull in different specialities from different sectors in the financial community. And just to go a little bit further on stablecoins, we've talked quite a bit about that on this podcast. We've seen different methods, tying it to the price of electricity, tying it to, like a global basket of currencies. In your opinion, what is a good stablecoin that will work, that will keep the costs down?
Well, it's very early to say, and I'm not sure if I have a very good answer to it. But I would say that stable coins in general, right now, it has been the only one that has been really, really accepted by the broader community is a fiat-backed stablecoin. Now, the problem with fiat-backed stablecoins, for example, Tether, and DAI, for example, is also a good example of a stablecoin, but it's nowhere close to Tether. But the biggest problem that stablecoins is facing right now is fees. So fees and congestion. So, for example, when I send any stablecoin that's out there on Ethereum, when I send it to someone else, sometimes my transaction just stuck, and you have to pay a heavy, let's say, gas fee to be able to make sure that your transaction goes through. So one thing that we definitely have to work on is to make sure that no matter what form this stablecoin takes, whether collateral backed like MakerDAO or an asset like USDT, for example, you need to be able to bring the cost down. You need to be able to make sure that when I transfer a stablecoin, it doesn't cost me, let's say half a cent to be able to transfer $1 of stablecoin. The second part is, no matter what sort of stablecoins you build, you need to make sure that for example, if you're looking at collateral-backed stablecoins, you need to make sure that collateral is not too high. And there are some ideas out there people are exploring right now is to reduce the collateral level that you see in MakerDAO. So, in generally speaking, many of these collateral-backed assets is that in those assets, sometimes you need 5 times the. So let's say if you want to withdraw, let's say $1 worth of stablecoin, then you have to put $5 worth of Ether in that contract. Now you can argue how much does it make sense from a real world perspective. Let's say if I want to borrow a loan and if I have to put five times the collateral, it just makes things way more complicated for end users. So that's also a design factor that people are taking into account for some of the new architectures that are being built, which is designing stable coins where the collateral ratio is not too high.
I see. And we've spoken a lot about kind of a good overview over this whole space, but specifically, I was hoping we could take these last few minutes just to talk a little bit more about Zilliqa and where you're going, what you're excited about, and maybe how our listeners can potentially get involved depending on where they're at in the world.
So Zilliqa, is a blockchain platform similar to Ethereum in the sense that it allows people to develop and write smart contract apps. We launched our mainnet. So the difference between Zilliqa and traditional and legacy chains is that Zilliqa is scalable. And so we have processed, so we ran an experiment a few months ago, and we observed that Zilliqa can process around 2,000 transactions per second on a private testnet. If you compare this with, let's say, something like Ethereum, they can process 5 to 10 transactions per second on average. So there's a huge gap between what legacy chains can process and Zilliqa can handle. And then I mentioned about the other benefit, which is the new safe smart contract language that we designed that will prevent some of the bugs that you see or vulnerabilities that you see in Ethereum chains. So we launched our mainnet January last year. And we were able to deploy the first contract June last year. So we are roughly speaking a year old. And we're already seeing some very good contracts that have been deployed on the chain. So one of the most popular contract is the Unstoppable Domain contract. So it's a contract that's very similar to ENS domains. So it allows people to basically replace, in some sense, their account address, which can be a 0x1b, a very hexadecimal sort of address, and replace that by human readable address. So when you want to send money to someone, then you just use that human readable address to send money across. And that is one of the most popular applications that's running on Zilliqa. Now, moving forward, we have, as I said, we are slowly pushing towards what I call Zilliqa 2.0, where we are pushing a lot of optimizations on the mainnet. And the idea is to make sure that we can improve on the throughput and we can improve the latency. So we can increase the throughput and lower the latency. So the latency is the time it takes for you to process your transaction, for the network to process your transaction. So in terms of adoption, we are looking for, sort of trying to bridge the gap between as I said, open finance and decentralized finance by working with parties or developing applications that are somewhat regulated in some sense, because I feel that that's where things are slowly going to go forward to. And for listeners who are interested in learning more about Zilliqa, you could visit our website, zilliqa.com, and join our Telegram channel, which is a very active channel for anyone who's interested in learning and interacting with the community.
Yeah, very good. That's certainly been a very good conversation so far. I really appreciate you taking the time to explain, a lot of these just, sometimes complex, sometimes not so much, topics to us.
Thank you very much for inviting me over.
Well, it's been my pleasure. Thank you very much again. And to everybody listening, thank you for tuning in. That's all for now. Thanks again.